YouTube gang, what's good? Interested coming at you, and I want to say welcome to something new. You feel me? Welcome to the trading journey. And I remember, if you watched the first video, it's called "The Journey Begins." If you haven't, go ahead and go check that out. But remember in the first video that I told you guys that it wasn't just going to be video games. I was going to implement some other things onto the channel as well. And in this part of the channel, I'm going to implement some trading things that I want to share with you guys. So this isn't like the stock market. So it's a little different. If you don't know what it is, I trade the Forex market. It is the largest market in the world, and yes, even bigger than the stock market. If you don't know what Forex is, do your best to try to do a little research on it. I'm not gonna go too far into detail about what it is, but that is what I'm trading here. That is what I'm going to be demonstrating on this trading journey, this trading education, whatever you want to call it. You feel me? So with that being said, I want to say welcome again, because this is going to be a long journey. So I've been trading for a while, or learning how to trade for a while. I want to say it's been about a year and a half, maybe two at this point. I can't remember exactly when I started, but I wanted to dip my hands into this because it is a good possibility that you can make another income with this type of thing. So I definitely wanted to dip my hands into this. I wish I had learned this much sooner, but that's okay. I'm learning it now, and I'm still learning as time progresses. So just bear with me with some things, and I hope you enjoy this journey with me. Welcome to the first of many videos. So with that being said, I'm learning how to trade from a guy named Michael, aka the Inner Circle Trader. That is the guy that is teaching for free on his YouTube. He's showing, he has a bunch of videos on there. I'm gonna show you in a second. He has a bunch of videos on there that you can go learn. You can go and try to learn about the Forex market. You can try to learn some strategies, and his stuff is really good. His strategies are really good. The recent one that I'm learning, he's doing for his 2022 mentorship. He's teaching a lot of things. The one thing that I found myself tied to when it came to his teachings was the imbalance, or what he calls the fair value gap. They're both essentially the same thing. So if I say fair value gap or imbalance, it's the same thing, don't worry. So what I'm going to try to do is I'm going to try to break down some things that I've learned from him, or that I continue to learn from him, and things that I'm doing in this nature to try to help you guys understand what it is that I'm doing and while I'm trading. So this is his channel, the Inner Circle Trader. He calls it the Inner Circle Trader. His full name is Michael. This is the playlist that I'm looking at, the 2022 stuff. This is what I'm learning. This is all the stuff that I'm learning. Filter it by playlist. This is what I'm learning. This is what I'm focusing on. And I'm not saying that none of this other stuff isn't helpful. It is very helpful if you go through this stuff and take your time with it. You're not gonna learn it. It's stuff that, depending on how fast you can learn and pick up things, you can be very profitable however you decide to do it. But this is what I'm learning. This is just the playlist that I'm using. If you ever check out his channel, I recommend watching these three playlists right here: the Market Maker Primer course, the OTE Pattern Recognition series, and the Market Maker Forex series. I started out with those two. These two were like essentially my favorite. The OTE was like really my favorite. Using that Fibonacci is just beastly. But this is his channel. You can go check him out. And if you're ever interested in trading, after you dig into Forex and you've done your research, come and check this guy out. He is really good. He knows his stuff. He's been trading for a very long time. I think he said he's been trading since the 90s. And his knowledge is just is powerful, the stuff that he teaches. Also, this is another guy. I have his Facebook. I think his name is Godwin. He knows his stuff. He uses ICT concepts. He knows his stuff, man. I see this guy. He just completely kills currency pairs. His setups are just phenomenal, man. So if you ever, want to need a little extra help, come to his page. And this is also the Inner Circle Traders page. These are the two pages that I mainly watch when it comes to learning about smart money concepts when it comes to the Forex market. So with that being said, I'm going to try to explain the strategy that I use when I look for when I'm looking for setups, like for the day, or when I'm trying to take a trade. And the one strategy that I use is the fair value gap, or the imbalance setup. Now, I'll try to go into as much detail as I can. I don't want to give like the wrong meaning. I have to go back and watch the video so I can give you the proper meaning. I'll try to break it down as much as I can for you guys, if you're watching this video. But basically, the fair value gap is like when price was only offered to one side. Like if it was only offered to buyers or sellers on one side, and then it comes back and then it creates a gap. It was one-sided, but it creates a gap. So something like this, it would be something like this right here. See how this low of this candle right here and the high of this candle right here has a gap in between it? That's essentially what that imbalance or fair value gap is. The market is one-sided. If one-sided being that it's either buyers or sellers. That is essentially the strategy that I use, and that is essentially what he is teaching, or starts out to teach, in the 2022 mentorship that he's got going on. And let me just say, it's been very helpful. It's been exactly what I look for. It's the one strategy that I look for. I'm also learning about order blocks too. I eventually want to learn about breaker blocks as well. So I'll eventually get into that, but we're going to stick to the imbalance or fair value gap for now. So what does it look like? What does a setup for like a fair value gap or, an imbalance looks like? I don't like using the replay option much, but we're going to use it just for the time being here, because why not? I'm just going to click right there. Why not? I'm just not going to worry about it. So basically, this is what I do when I come to my chart, when it comes to trying to get my intraday set up. So what I'll do, I'll come to the daily. As much as I don't like the higher time frames, like the daily, the 4 hour and everything, it doesn't hurt to look, because the higher the time frame, for me, honestly, the higher the time frame, the better. It just means that essentially that the liquidity could be higher, and also Michael said that banks trade off of these daily time frames, so that's why you want to look at the daily time frames. I always come to the daily time frame just to see where I'm at on the chart, and to also see if there is an imbalance somewhere, because the imbalance is going to be one spot where liquidity is going to help me frame that setup for the day. So I look at the 4 hour and I look at the daily. If I don't see anything on the daily, then I would just drop down to a 4 hour time frame just to see if I see anything. Like just there, I didn't see anything on the daily. So just, I drop to the 4 hours, see if I see anything. And I don't really see much. I don't see much. I'll zoom out a little bit just to see if I see anything else. You don't really need to look too far back, but I don't see much. But what I do see these relative equal lows right here. I do see this this low right here that it looks like it wants to, it could possibly come down there. So those are just some spots to watch. I don't see any sell side imbalance. I don't see, I see a buy side imbalance right here, but it was obviously filled over here. But that's essentially what I look for. The higher the time frame, the better. The liquidity will be there, and that's just the things that you want to watch out for. Some people may look like, they'll draw a trend line, they'll see this, then they'll try to trade this breakout. But I don't essentially do that. I'll draw a trend line just to see where the liquidity is, and then that'll help me know, like, okay, there should be liquidity below all of this, and before this, obviously you can see that there was an imbalance here that I could have traded into had I found a setup, somewhere up here. Once you go into the lower time frames, you could have possibly saw a setup somewhere. But that's essentially what I use trend lines for. I don't really use them often. I don't see them. I don't, put them on my charts like that. But just for sake of the video, we're not going to do that. So right now, no setup. You don't see anything. So I'll just extend it out. I'll just go forward, see if it creates anything, see if anything happens that catches our eye. And right now, I do see something. You do see a buy side imbalance. You got one. Let me mark it up for you. We got one right here for you. Just go ahead and extend it out, and then when it hits this buy side imbalance, when it taps into the low of this candle, see how it has that gap in between the high of this candle and the low of this candle? It's an imbalance. That is an imbalance. In this case, it's a buy side imbalance. But you want to also combine it with other things, like if it breaks a high, if it breaks a short-term high, an immediate-term high, you want to combine it with those type of things, because it's gonna help you with your analysis from day in to day out. And that's what I try to do. I try to combine it with what I'm doing. I'm trying to combine it with, okay, did it break a high? Did it break an important high or a short-term high? A short-term high. I apologize. But essentially, that's what you want to look for with an imbalance. You want to see something like this when the market was just one-sided and it offered one side, like it offered one side of buyers, it offered one side of sellers, and you want to see if it breaks a short-term high or an important high. So right then and there, I have pretty much my setup for what I would be looking for in the future. If you want, you can go down into the lower time frame, see if you can maybe refine it. That's what I did right here. Went to the 1 hour, maybe refine it, see if you see anything. Not really much of one right there. It's a very small imbalance right here, but not really much of one right there. Maybe on the 15-minute you may see something, and you still don't really see much right there, but it's a very small one in here, a very small one that got hit. It's not filled completely, but this will play a factor in the future. But for the most part, you do see a 4-hour imbalance. So you just want to wait until it comes back, and boom, right there is where you see where it comes back in there, and play it one more time. And then that's where you want to try to kind of get your entries when you see these imbalances. See right here on the low of this candle, or on the 4-hour, you want to get in on the low. You want to get in on the low of this candle, but being that this is a 4-hour time frame, this is a very big risk, and I can show you right here. Because if you want to get in on the low of this candle right here, your stop will probably come just up under that candle, and you'd aim for the high back here. See how big that risk is? It's a very, very big risk. That's why you want to go into that lower time frame to look to minimize your risk. That's essentially what you want to do. This is a very big risk. This is a very big time frame. So once it taps in here, this is where you want to go into scale in to see what you see if you see an imbalance within the higher time frame imbalance. That's also what I look for as well. And within here, I do see one. It's very, very small. It's right there. It's right in there, and it tapped it in there, and looks like it filled it. What's the high of this candle right here? High is 32,824. The low of this one is 32,821. So it filled it. So now, this is essentially where you want to look for your buys. Once it goes up under this candle, this is where you want to look for your buys right here. But you want to do it on the lowest time frame possible. You want to minimize basically minimize your risk. You want to get the lowest risk as possible. And since it filled this imbalance in right here, it didn't come below this candle right here that created the imbalance. It didn't come below this low, I'm sorry, because it's this on a lower time frame. So that's essentially how I look for these things. That's essentially what I want to do when it comes to trying to not frame, but to get into the market, to get in. So for now, for the sake of it, I'll mark it up right here so we can leave it up. Make sure I'm doing long. Like I said, right here is where you want to get in, and my stop loss will go underneath the low of this candle right here, and I just target the highs back here. So we'll leave that up there for now. So right now, if I were to take the trade, I'm in the trade, I'm back here. We'll keep it over here because it looks like it tapped in about right there, but we'll keep it right there. So at this point, I'm scaling in to try to, minimize it as much as possible. And let me move this out of the way. So right here, this is the risk. I didn't change anything. 15-minute, you're looking for those important highs, important lows, whatever the case may be. Now this is where it gets interesting. You want to get in on the lowest time frame as possible so that it even further minimizes your risk. And you want to look to see if you see an imbalance within the imbalance. That is essentially also what I look for, but I'm looking for that buy side imbalance. So I'm looking for that order block that it can possibly tap into. I'm not going to get into the order blocks in this video. I'm just going to stick to fair value gaps for now. But that's essentially what I'm doing. I'm looking for inside the imbalance. I'm looking for another imbalance. I'm looking for, just the form of entry is what I'm looking for. Now, ICT says that these high frequency setups for the intraday, they happen on the lower time frames. They happen on the 1 minute, 2 minute, 3 minute time frames. They even operate on the seconds time frames. But that is essentially where these high frequency setups happen on these for the indices on these lower time frames. That's essentially where you want to try to get those entries and get in like as soon as you can, or you want to get some of the best entries. So with that being said, the 5 minute time frame, he said that the 5 minute time frame still has room for those setups. So in order to get those high frequency intraday setups, you want to use that 1 minute, 2 minute, 3 minute time frame. So the 5 minute, you could use it for a setup, but I'm going to go lower. I'm going to go to the 3 minute. I'm going to start there. And this is essentially where I'm looking for my entry. This is where I'm trying to get into the market, get out of the market. Now remember, this position that I have marked up is marked for the 1 hour time frame. I could keep this on the 1 hour time frame, or I could just scale it down, target these lows right here. I'm sorry, not the lows, the highs. And I can be all right with that. That's not a bad risk. That's a very good point to aim for. Nothing wrong with that. And then this is my entry right here, where this line is right here. This is where my entry would be. And I'm looking, remember, I'm looking for those, I'm looking for that imbalance, which is a very small one right here. It eventually gets filled. And right now, right then and there, we just wait. We wait and see. We wait to see what we see. Because we already have entry. If it takes us out, it takes us out. And then just play from there. And you also have to look at the time of day as well. The time of day plays a key role. In between 8:30 is when the news embargo lifts. That's when all the news starts to come out for indices, for SPX, NAS, and US 30. That's when you want to look. You want to look on Forex Factory. Check your news. But time of day is important. The equities market opens up at 9:30. As you can see, this is well past 9:30, and this is when a lot of the banks make their moves. They make their moves in the morning for these indices at 9:30. From 9:30 until I believe 11 is when they tend to get into the market to make their move. And then also from 2 o'clock to about 3:30, I believe, is what ICT says is when you want, is another time when you can get in on the afternoon. This is just the morning, but the morning is by far the best time to try to get in on these indices. And as you can see, if we just play it, my entry is working out. It's just playing out, and we just keep going, and boom, right there, winning trade from this entry right here. So that's essentially what you want to look for. You want to look for those fair value gaps on those higher time frames, but also on those lower time frames. Look for those fair value gaps within the area where the fair value gap is, or you can get an order block setup as well. So that's essentially what I look for. That's what I try to do. I don't make it any more harder than it needs to be. I don't try to draw a trend line. I don't draw a supply or demand area. Those type of things. I don't do that. I used to do that, but I no longer do that. And because this is what works for me. This is what has helped me. You know what I mean? So that's essentially it. That is the things that I look for. Like I say, I know I'm gonna try to break it down further for you guys, but this stuff that he is teaching, it works like a charm. And let me just say, I've had very good success trading this way. So within this, it's a very, very small one. Maybe if I go to a lower time frame, it's probably much bigger. Nope, not too much bigger. Let me see. 1 minute. Oh, sorry, didn't mean to do that right there. But yeah, even on the 1 minute, right here is that imbalance. It's very, very small. Let me take this out for you because we don't need it. But this is another one, a very, very small one that it eventually taps into if you extend it out. And just extend it out within there, then boom, right there, you see that it gets tapped into, and it doesn't go below the this candle right here. So looks like it took entry back here. It took entry back here, about right there. And then you just target the highs, which is back here. And then you want to set the stop loss right up underneath that candle. That's this candle right here. It would be this one. You want to set it right up under there. And even on the 1 minute, you got a minimal entry right there. For those of you that like those 1 to 2 or 3 or 4 setups, your risk to reward ratio, this is looking at a 1 to basically 15 setup. You're risking 19 points for 289 points. That's a lot. That's a very good risk to reward ratio, as you can see. And that is essentially how I trade. That is what I look for. Those are the things that I look for when this is what I look for when it comes to trading. I just look for that gap that gives me an entry into the market. So that's basically it. I'll show you another one. I'll show you one that see if one happened today. Let me get out of replay mode. Let's see if one happened today. Let me zoom in here. So like I say, this is how I start on the daily. I don't see anything. I'll check the weekly, see if it's hitting any important lows or anything. Looks like it wants to come for this low right here. Look like it want to try to come for this low. We'll see what happens this week. But on the daily, I'm not seeing anything. Very small one that it came and tapped into. It filled it. So after this run right here, you can expect to see something low, some lower stuff, some lower prices somewhere in here. You could possibly see it somewhere in here, but we don't see anything on the daily. So what do? We drop to the 4 hour, and it is currently the 14th is passed. So this is that 9 o'clock candle. Still don't see anything. No gap, no low, nothing too crazy. Got a high right here, but nothing too crazy. Okay, so you don't want to get discouraged because the Lord, you keep dropping. You want to drop these. You want to continue to drop time frames. And another thing that I do that kind of helps me as well. I'm sorry that as I go back to the daily, it's still the 14th. This candle's basically started at 6 o'clock today when the market opened back up. One thing that I do mark to help me out. I'll mark the previous day high and low. This is March 11th. This was Friday when it closed. This was Friday when it closed, so I'm just marking that out. And then this kind of helps me see what it could possibly do. 4 hour, you see it kind of took out. It came and took out a low. It came and tapped into a low from Friday. So right then and there, you could have possibly look for buys somewhere in this area. Maybe a buy setup. Probably would have been a buy setup somewhere in this area. So it took out this low. You could have been a buyer somewhere in here. And honestly, what do you see possibly happening for tomorrow morning? Another fair value gap. Let me mark it out for you. So price could come in here, tap in here. Once it's either gonna tap in here, which it already has done. It could continue to drop, or it could come in here some more, or fill in this gap, and then it decides to drop. So this is what could possibly happen on March 15th. I'm gonna take a look at this tomorrow when the time comes. But we'll look into what happened today. Nothing too crazy today. This is around the time from about 8 to 11. This is when you want to see it. It took out this high right here, and then just dropped. Took out this short term. I think this is a short term high. Took that out, but you don't see anything here. But this is this is buy side liquidity right here. So you want to mark that and then see what you see on the lower time frames. Now you see that buy side liquidity has been taken out, and boom, right here. Here's all the action that you could have gotten into. Now, obviously, like I say, the time that you want to look around is around that in between that 8 and 9:30 time frame, or 9:30 is when the equity market open. Could have got in for the buy, took out this low, filled in this imbalance. And we'll go in and look at that. We'll mark that right there. Go in and see what we see on the lower time frames. But you got a imbalance filled. It filled it, rose up, took out this buy side liquidity, and it came back in, took out the previous low for that day, which was on March 11th. This is the low for March 11th. This line right here. We'll go ahead and make this different colors so we don't cause confusion. the low from the previous day. And in here, right here, you have imbalances right here, but this is why you don't kind of essentially want to look at these imbalances, because this is another thing. You want to see the imbalance when it forms. You want to see it break a low. So I wouldn't look at this too much. This is probably right here the imbalance that I will be looking at, because formed a little short-term low right here, and then it just broke through. So this is probably the area that I want to see it look to fill at some point, or tomorrow, whenever it decides that it wants to fill. It may even fill it during London session. So this is where I'll be looking to enter my sell area. Anything above this high, and then you can mark it out. Matter of fact, I'm just gonna mark this out because I want to see if this plays out for London session. And it looked like it got in back here. Well, it got in multiple entries, so it's okay. And I'm just gonna place my stop right above that candle, because I want to see if this plays out. And what I'm going to do, I'm gonna target these lows down here. Well, I could go into the higher time frame and see if anything lower, but I want to get greedy. I'm okay with a 1 to 2 setup. That's fine with me. But this is essentially what you want to do. You want to minimize your risk as much as possible, and you want to get in. You want to get in for that sell side, imbalance, which I marked, which is from the higher time frame right here. We'll see how this plays out tomorrow. It may. Oh, I didn't. Crap. Yeah, we'll see how it plays out. Overnight. I'll come back and see that. But this is essentially what you want to do. You want to see the imbalance after a break of a short-term low. In this case, since it's a sell, or a break of a short-term high if it's a buy. And this is the one I would probably target. It could come up here and take this out. It could come in here and get this imbalance right here. Who knows? The market does what it wants. But you want to refine it. You definitely want to refine it. You always want to refine your entries. And even right here, we'll look at the buy right here. It comes in right here. We have it tapping in to fill in that imbalance from the higher time frame that we saw. Then it just took off, and it looks like it didn't offer anything that we can see on the 5-minute. But this is why you go to the high frequency setups. This is why you want to go into the lower time frames, because this is where those lower time frames have those high frequency setups. And right here, you can see this one is more of a order block. This one is more of a order block setup, because after this high right here formed, you didn't really get a break. You didn't really get an imbalance after it broke the high right here. You got more of a order block setup. Order block is more than the last DOW candle before the up move. If that was the case, then you would say it was this candle, and it looks like it works out. But I believe it's this one. I believe this would be those consecutive down candles. This would be my order block. Mark that line out, and then once it broke that high, once it broke this short-term high, your entry would be right here, because there's no imbalance, really no imbalance. It could be one on the 1 minute, but we'll see. But even right here, you could have gotten in right here, but this one is, I would prefer to see it break that high and then create the imbalance. But if you did get in right there, hey, kudos to you. Good job. But let's see if we see anything on that 1 minute or on the 2 minute time frame. 14. See if there's an imbalance after that break. Nope, we don't have one on the 2 minute. And just gonna check the 1 minute time frame. And even on the 1 minute right here, we have this short-term high right here. And then here's your entry right here on the 1 minute. Here's your entry. This short-term high was formed, filled in the higher time frame imbalance. We got that push above this short-term high, And then boom, right here, smaller one was created. Mark that out. Then boom. As soon as it taps below this candle, that is your entry. That's an aggressive entry. I like I try not to get the aggressive entry, but I don't like to miss entries. So once it taps below this, man, I'm in there for that buy, and I'm targeting those highs. So let me mark it. Let me just mark it for you. But this is that lower time frame entry. Looks like it took. We'll just mark it right about there. Why not? And then you want to target those highs. Those you want to go. You can go back onto the lower time frame. I mean the higher time frame, and just go back and look for those highs that you want to target. Since you got lower right here, you could essentially target those highs. If you want to get those, if you feel like there's more highs that you can get, you could target that buy side liquidity that we had back there, which is right here, and then go back, minimize the risk. You go back and then minimize the risk. You want to go below this candle, a little bit below it, and then boom, right there, just like that, you're risking 63 points for 244 points. But that's essentially what I'm doing to get my entries, guys. That's essentially what I'm doing to trade. That's what I'm learning to do, because it's simple for me. I don't have to look for anything crazy. I don't have to draw no trend lines. I don't have to look for supply and demand areas. That is essentially all that I'm looking for. Nothing crazy. Very simple, short and sweet, and to the point. And that's pretty much it. I know I probably didn't do a great job of breaking this down for you guys, but you know, as I go, I'm still learning. I'm still doing the best that I can. I'll do all that I can to teach you guys as much as possible. I'll try to go into further detail to break down like buy side liquidity, sell side liquidity, you know, short-term highs, short-term lows. I'll try to break those things down as much as possible. Just to get an explanation for you guys, because I know this is like gibberish to some of you guys. Some of you guys don't even know what I'm talking about. But all in due time, I will do my best. And it looks like it started over here. So we'll just mark it out as if it started right there. We'll keep that stop loss just a little bit above it. We'll go to 90. We'll make it about 90. I'll leave it right there. That's fine. And then we're gonna let this play out overnight, because it may London session, it may come right in here, or it may just drop straight there. I'm not gonna enter, or I could enter. Why not? Because it already tapped into it. But I'm not gonna enter. This isn't ideal times to enter, but I do want to see it play out, so we'll let that one go. But anyways, guys, that's gonna do it for this video. Like I said, I'll try to break this stuff down further for you guys in the future. Let you know what a swing high, swing low is, those intermediate term highs, intermediate term lows, short term highs, short term lows. I'm still learning these things, guys, and I want you to be on the lookout for the trading journey, for these trading videos. I'm gonna try to get them in as much as possible. And like I said, I'm going to be trying to spread the education and the knowledge to you guys as much as possible. If you want to get in on a trading journey, if you already know about Forex and you want to get in on a trading journey, this is the guy to come to right here. The Inner Circle Trader. This is the guy to come to right here. And if you want to know anything, if you want a solid strategy, you know, this is the guy to come watch. And understand that this may take time for you to learn. He states that this stuff is going to take time for you to learn. Like, it's going to take you at least a minimum of 6 months, probably a minimum of 6 months of consistency to try to learn this, for you to become comfortable, for you to become profitable. You know, don't rush this, guys. It's going to take time if you do want to learn it. It's taken me a very long time, and I'm learning it well. And I'm learning this stuff really well, and I'm just continuing to make myself more consistent, continuing to do this type of thing day in and day out. So with that being said, guys, I'll get at you in the next video. Your boy is out.